Hello stock gurus and welcome to another episode. Today I'm going to talk about mistakes that I've made in the market, my pains, my experiences of 17 years of investing. The first one being leverage. A lot of people use leverage, a lot of people know about leverage, and it's one of the worst things that you can do in the stock market, in cryptocurrency market, in Forex markets. Do not use leverage. The reason is, I first started investing when I was 14. My dad gave me 2,000 USD. He said to gamble it in Forex markets, to try and trade it to make it into more money. That's a very common thing people do. They put a lot of money, they try to use high leverage and they try to make it into a lot of money. So when I was 14, I did this a little bit. But I found a pattern with Reserve Bank of Australia. Every Tuesday of the month, they would release their interest rates. And I found a pattern that I could put in that money with leverage and make it exponentially grow. And I managed to grow it quite considerably, that $2,000. And then what I realized is, and this is the common mistake that everyone does with leverage, and this is why you need to avoid it. Every time they make money or they see a bigger gains, even if it's with $100, they use 100 times leverage, 50 times leverage. In Forex markets, in cryptocurrency, 300 times leverage. In stock markets, usually capped to around 10, 20, 50 times leverage. But what they do is they put in money, they bet, and it's gambling, because you don't really own the stock. You own a contract saying you own the stock. Two, if the stock moves a small amount of money, you get margin called, you get closed out, your leverage gets taken, margined, and you get your account wiped out. So what the common mistake is, people put money in, they use leverage, and then they bet on the movement of the stock price in small amounts of movements. And what happens is they usually see a lot of money, making a lot of money, then they lose a lot of money. So they put more in. But what happens is each time, even if they make money, they keep increasing their leverage and they keep increasing their risk. And every time they're betting against this movement, eventually the one time the movement goes against them and it wipes their whole account out and they lose all their money in the account. Do not use leverage. Unless you're an investor of 5 to 10 years experience, I really recommend, if you're one of my students and you've really experienced 5 years, maybe lower leverage, but I really recommend against it. Do not use leverage at all. It's much better for you to own the stock. Second thing that I've learned, pain or mistake that happened in my 17 years of investing experience, is margin. Margin is the same as leverage. So margin is, but it's just smaller amounts. You can use it on most of the big brokers, Interactive Brokers, Charles Schwab. They give you money to increase your position size in the markets. And that's also, a lot of people use margin, but what they make the mistake is they go over margin. So they bring their margin close to their amount. So you have your capital in your account, say you have $1,000, and then Charles Schwab gives you a $1,000 margin. So you can trade $2,000 worth of a stock. But then again, same thing as leverage. If that stock goes against you, against your movement, it has the potential to wipe out your account. And this is going against the rule number one of mine and Warren Buffett's when it comes to making money. Rule number one is don't lose money. Rule number two is don't forget rule number one. The main goal, we grow and increase our investment, increase our wealth, is by not losing money, by investing it and compounding it and not losing it. And leverage and margin give you the possibility of losing your amount, losing your capital. And that's why you try to avoid them at all costs. Margin, you can use a smaller percentage, 30% of your account, but I really recommend, unless you're an investor, to stay away from margin. The third thing, pain, suffering, crying, and suicidal thoughts during markets. This has happened a lot. You know the stories of many Wall Street bankers killing themselves, of many people, just a lot of pain sometimes when people get too emotionally attached in the market. And this is something that it was very difficult to overcome. It took me around 10 years, actually, of my 17 years to really overcome it. And still, I need to remind myself, even say, for example, the NASDAQ market movements that we had the last month, when the market dropped quite considerably, around 10%, and staying around, hovering and balancing, but it's quite a painful drop to see some of your accounts. Maybe you had $20,000 in profits, $100,000 in profits, $1 million in profits, to get wiped down to $70,000, $700,000. And that's hard to see. And I've noticed a lot of people, what they'll do is they'll feel suffering, they'll cry, they'll make their day or their week or their month or even sometimes their lives about this loss. Even though it's sometimes, a lot of the time, paper loss. It's not even, they haven't closed out their trades unless they got margin called and leverage, which a lot of people do. But I want to remind you that the US stock market always goes up. The US NASDAQ has always gone up. The US stock market since the 1800s has always gone up. And you're buying amazing companies here for the long term. On those down days, it's not a down day. Don't panic, don't cry. It's just a discount day. It's a time to buy your companies that you want to own for 5 to 10 years at a discount that day. And really remember that it's okay. It's like waves. The stock market is literally waves. If you look at the charts, as you see every day on my videos, it literally looks like waves. It goes up, it comes down, it goes up, but the goal is, or hills, the goal is we're buying hills on an Everest. That's the concept that you need to keep in mind. And on those down days when people are crying, suffering, panicking, or even sometimes committing suicide, don't. It's okay. It's just the downward hill on the normal upward movements of up Everest. And these are the hills. And you're buying these bottom of the hills to try and profit on that movement back up on the climb of Everest. Don't panic, don't cry. It's okay. It comes in waves. That's everything in life. Next thing, not investing every month. Not consistently investing. This is one of the biggest lessons that I've learned. The best strategy, if you look back during global financial crisis, during the dot-com bubble, during COVID, a lot of people panicking, pulling out their money, pulling out their investments. But the US stock market always goes up. The US stock market is higher than COVID. The US stock market is higher than the global financial crisis. The US stock market is higher than the dot-com bubble, much, much higher. And you need to always remember this. This is Everest. This capitalistic system, this technological age is just beginning. Half the world is not even connected online yet. Half the world are not using Facebook's product yet, are not using Google yet, are not using Amazon's services yet, are not using, this is just the beginning, everyone. We are half of Asia, Africa, not even online yet. Eastern European, not online yet. This is the beginning of the technological age. We were dinosaurs before. We were separating ourselves by color, by skin, by lines. We were dinosaurs. And only now are we entering the technical age. And this is just beginning. No time in history have so many people been investing in stock markets and cryptocurrency markets than any other time in history. We are at the peak, at the beginning of this, and it's about to climb Everest. Another thing to remember is, and that means to dollar cost average every month, buy your companies, buy your investments monthly, not panic on these downward movements, but think of them a discount on the day, on that month that you're buying your asset for the long term to really compound and have your money grow for you and work for you. This is the next one, a really important one. I would say it's let's say 6, because there was a bit more in that last one. Number 6, have your money work for you. This is like it's 6, but I would put it actually earlier if I actually thought it through more. It's one of the most important things. Have your money work for you, not you spend your time to get $10 an hour or spend your time to get $50 an hour. Your time for money, that's what nearly the entire world does. My time for money. No, it needs to be money for money. It needs to be, you take your money that originally you might have had to use your capital, you might have had to use your time, you might have had to work as a doctor, you might have had to work at McDonald's. You had to use your time to get that money. But what you do with that money is very important. Invest that money, put it into a place that can grow to give you more money. Like if you followed me before on Tesla, it grew 40 times your money, and many of the companies that we target, and Bitcoin growing exponentially since we've been following it on this channel. It's putting your money in a place that your money works for you and your money grows while you're sleeping, while you're sitting at home, while you're eating McDonald's, while you're going on a boat trip, while you're laying on the beach, while you're driving a motorbike. While you're doing that, your money is working for you and growing. You're giving your money to Tesla, you're giving your money to Facebook on the condition that they use that money to grow their company, sell more products, and give you money back. That's the biggest thing that you need to remember, using your money to make more money, not your time to make money. As soon as you can disengage your time from your money, that's when you can really move forward on being financially free. And investing into one stock, buying one Starbucks coffee stock around $40, I think it is Starbucks, around $40 to $70, 7 Starbucks coffees, you can buy one Starbucks stock of the company. And that money, instead of the coffees being in your stomach and then you could just make coffee, or until you have super abundance, but buy your coffees anyway, it's irrelevant. Just put your money, you're going to get $1,000 in your lifetime. Some of you are going to sell cars and get $10,000. Some of you are going to sell houses and get $1 million. Put that money to grow instead of wasting it and spending it. Invest it into things that will grow and work for you separate to your time. That's a very big one. This is the last one, this is number 7, and I think this is one of them, also a very important one. It's relying on one source of income. If you're a mechanic, if you're a doctor, if you're a plumber, if you have a business, if you work as a cleaner, if you work as a medic, if you work flying kites, if you kite surfing, if you work driving a motorbike, if you work in Uber, if you work in a bank, and you have that, and it's just one source of income. Every month you're getting your money, and that's that one income. That job is giving you that money. You're making a very big mistake that was very painful for me to learn. I once had a company that worked for Google. We made apps for Google. We had hundreds of apps. We had over 40 teams of developers working on these apps and maintaining them and growing them. It was quite a huge business. And in one day, Google decided to turn off our apps and our revenue. And Google does this very commonly, and it's very painful. Only recently has YouTube and other companies been awake to how much it can hurt people to demonetize it. But they destroyed that company. Those 40 teams got wiped out overnight. My income went from making millions to nothing in one day. And that's what I learned. Never have one source of income. It's much better to have I personally have 10 sources of income. This YouTube channel is one of them. The ads from Google is around $10,000 a month. I have another one from a chat group that we have. That income is like $7,000 a month. I have another income from the Stock Guru Master Course. It's making around $50,000 to $100,000 a month. I have another income from an e-commerce store that sells products, and that makes a few $1,000s a month. I have another source of income I have another big YouTube channel that makes a few $1,000s a month. I have another this is the concept. You need many sources of income, and you want as many as you can, 10 if possible. If you ask any wealthy person, they're going to have many sources of income, and that disengages the pain of relying on one. That one time, even if you have 2, it's still better than 1. Get 10 if you can. You can make money on Amazon. You can make Amazon books. You can make a YouTube channel. You can make apps on an app store. You can make a website. You can make a website selling art. You can make a website selling e-commerce products. You can sell something. You can buy something from China in bulk and sell it in your local shopping center. You can repair fridges. You can learn how phones work and how to repair them. You can learn how to invest in the stock market. You can learn to trade. You can find many, there's infinite ways of making money. Take 10 of them that you kind of like and start making incomes out of them. That way you're not relying on one. Even if you're a doctor and something happens, or a lawyer or an engineer and something happens, don't rely on one income. Invest. And what's amazing with the stock market, you buy what I teach in my course, what my Stock Guru students know is I buy 10 companies, 5 in diversified industries, construction, medical. That means I'm owning Boeing. So I own a plane company. By owning one stock of Boeing, I own a plane manufacturing company. By owning one stock of Wells Fargo, I own a bank. By owning one stock of CRISPR, I own a DNA editing technology company. By owning one stock of Facebook, I own Instagram, 10 sources of income. So I hope you liked this video. I hope you learned a lot about my pains and sufferings that I went through. Why I want to tell you this is I want you to avoid them. Don't go through the same mistakes. Learn them from me. In my course, I also teach a lot of these things to avoid the laws of money and just mindsets about everything that I'm talking here. I hope you liked this video. I hope it was very interesting. If you'd like to see something from me, I'd love your comments in the comment. Let me know what you would like to see from these videos. If you're investing in the stock market, how much you're investing in the stock market, any companies you'd like me to analyze. Thank you for watching. Have an amazing weekend. This is James from Stock Guru, and I'll see you again tomorrow.